Wall Street just crossed a line it never crossed before. And if you're sleeping on what just happened, you might miss one of the most important moments in Bitcoin's entire history. On April 8, 2026, Morgan Stanley, one of the largest financial institutions on the planet, officially launched its own spot Bitcoin ETF. It's called MSBT, the Morgan Stanley Bitcoin Trust, and it's now trading live on the NYSE Arca. But here's what makes this different from every other Bitcoin ETF you've heard about. This marks the first time a major U.S. bank has issued a spot Bitcoin ETF under its own name. Unchained. Not a third party. Not a separate fund company. Morgan Stanley itself. And they didn't just show up. They showed up with the lowest expense ratio in the market, just 14 basis points, undercutting BlackRock's dominant IBIT fund advisor Perspectives, which charges 25 basis points. Within the first week alone, MSBT pulled in over $100 million in inflows, making it Morgan Stanley's most successful ETF launch ever. Lightbulb why this matters for Bitcoin's growth. Now let's talk about what this actually means for Bitcoin, because this isn't just a product launch. This is a structural shift. Morgan Stanley has 16,000 wealth management advisors overseeing $9.3 trillion in client assets. Unchained. $9.3 trillion. These advisors, who since 2024 could only recommend third-party Bitcoin ETFs, can now push clients directly into a Morgan Stanley-branded product. That means Bitcoin exposure just became embedded inside one of the world's most trusted wealth management networks. This is institutional adoption at its deepest level yet. Droplet why this matters for liquidity. As of early April 2026, all U.S. spot Bitcoin ETFs combined held $88.71 billion in total net assets. And now you have Morgan Stanley, with trillions under management, entering the race with the cheapest product on the market. While BlackRock's IBIT remains the most liquid Bitcoin ETF with around $55 billion in assets, Morgan Stanley's vast wealth management network could steer significant new flows toward MSBT. More capital flowing in equals deeper liquidity equals less volatility over time equals more confidence for both retail and institutional investors. This is exactly what Bitcoin needs to sustain its next leg up. Bank why this matters for adoption. Here's the big picture on adoption, and pay close attention. Morgan Stanley has already filed S-1 registrations for both an Ethereum trust and a Solana trust. They've also applied for a national trust bank charter for digital asset custody, fiduciary staking, and token transfers. Unchained. And they plan to launch retail crypto spot trading for Bitcoin, Ethereum, and Solana through E-Trade in the first half of 2026. Fintech news. Think about that. E-Trade has millions of everyday retail investors. They're about to have direct crypto access through one of America's most established brokerage brands. This isn't just adoption. This is normalization. Bitcoin is no longer a fringe asset sitting outside the financial system, it's being built into it. Chart increasing why this matters for expansion. The competition is heating up in a way that can only benefit Bitcoin's expansion. Goldman Sachs has filed for a Bitcoin Premium Income ETF, and BlackRock is working on similar income-focused products, signaling a broader shift as major Wall Street firms race to offer more structured Bitcoin investments. This is the ETF wars, and Bitcoin is the prize. Every firm that enters this space brings new capital, new distribution, and new legitimacy. The result is a more defined, maturing market, where fee competition and distribution power are accelerating adoption across both institutional and retail channels. We're watching Bitcoin go from speculative asset to core portfolio holding. Let's be real, this is the kind of signal that doesn't come often. When Morgan Stanley puts its name on a Bitcoin product, backs it with 16,000 advisors, and calls it their most successful ETF launch ever, in week 1, you have to stop and pay attention. This is not hype. This is institutional infrastructure being built around Bitcoin in real time. The question isn't whether Bitcoin will grow. The question is, are you positioned before the liquidity fully arrives? If this video helped you connect the dots, smash that like button, subscribe to Flow Money, and drop a comment. Are you bullish on Bitcoin after this news? It is never too early and never too late to start building wealth. See you in the next one.